Now, before we start, please allow me to introduce our first speaker for today, CY Saw Chuen Yean. I believe you are quite familiar with CY Saw as well. He's currently the lead trainers of excellence. He's also a chartered market technician, chartered holder, CMD, and his specialty is in training and development, technical analysis, trading system development, NLP, and also coaching. So please allow me to pass it over to you, CY.
Good evening.
Good to go. Your slides is
Okay,
good.
how are you doing? I hope everything is well and fine on your side. So today's topic is about how to develop your winning plan for futures trading. I believe today some of you here are having a couple years of trading experience, right? Especially in the stock market, while some of you are still new who are just starting your trading journey. So regardless of what trading background or experience you come from, you need to understand that it's important to have a trading plan in order to win. So if you are trading stocks, you need to have a trading plan for stocks. And if you are trading futures, you definitely need to have a different plan for trading futures. Why? Because stocks and futures are completely a different trading product. And many of the practices and strategies that you do in the stock market may not necessarily be applicable in the futures market. So which is why you need to modify some of the methods how you trade the futures market. Okay, so in this webinar, I am going to highlight some of the key things you need to take note of when you modify your futures trading plan. And because of the time limit, I'm going to share with you from a bigger picture perspective so you can see how futures are different from stocks and what you can do about it. And by the end of this session, you will gain some tips and tricks how to develop your winning plan for futures trading. So let's get started. Now, a quick standard disclaimer, I give you a few seconds to look through it, where this presentation is provided for educational purposes only, to give you a quick understanding to widen your horizon and exposure about some of the key knowledge in trading. However, you still need to study in detail and develop the necessary trading strategies, methods, or even styles that suits you. I believe Ting Ting has already introduced me. My name is CY and I specialize in trading systems development and trading psychology. Now, today's webinar, I organize it in 4 topics. So the first topic, understanding the big picture of trading. I will show you a bigger and overall picture about the whole process flow of trading so that you can actually understand which of the area you can actually need to focus on and improve on. And topic 2, the market forces that drives the market. Of course, when it comes to trading, you need to know that there are reasons behind that drives the price to go up and come down. Topic 3, timing the market and riding the bull and bear. So timing is important when it comes to trading, and you need to at least know the basics rules of trading. And lastly, topic 4, winning starts from developing a trading plan. So a lot of times we do know that importance of planning. However, we are not quite sure why is it important. So in fact, later on, I am going to share with you why planning plays a critical role in almost everything. Same goes to trading. You need to have a trading plan so that you have a guidance of how to follow your trading process with discipline. Now let's start with the first topic. I'm going to share with you a bigger picture and overall process of trading first so that you can understand exactly which area you are weak at and which of this stage that you have not done before so that you can actually improve on your knowledge, okay? And for most people, when it comes to trading, they learn a little bit here and there, whether is it from books, from YouTube's webinar courses or any other forms. And the knowledge that you may gather, right, is quite, a scattering everywhere. And it is not actually integrated with each other. So this is where you may develop a tunnel vision about trading. Now, meaning is that you may be too focused on one or two things in trading, and then you develop a limited perspective and forget about the whole bigger picture about trading. So in this topic, I am going to share with you the whole general process flow in trading. Now, first things first, let me ask you a question. Do you know what are the important steps in trading or not? Okay, my question is, do you know what are the important steps in trading? If you know the answer, you can type your answer in the chat box. And then later on, I am going to share with you which of these processes are actually important and which of the process you can actually put less emphasis on. Okay, so let me know what do you think, which of this process is important in which of the steps is important in trading. If you think analysis is important, you can type in analysis. If you think having a good indicator is important, you can type in indicator. Or trading psychology is important, you can type in trading psychology. And later on, I am going to share with you a whole process. Okay, so once you understand the whole bigger process, right, then you immediately know what trading is all about. Because if you are just focus on one piece of thing in trading, you might not get the whole big picture. Okay, so I see some people will put risk management, money mind, psychology. Some of you put trading strategies, how to enter and exit the market behavior. A lot of yours are quite true and accurate, and some of it, I would like to actually share a slightly bigger framework so that you are able to expand your horizon to see which of this stage that can actually complement your trading process. Okay. Now, there are 5 things you need to do in trading. So when it comes to investing and trading, so this is what I call it the PADEM. Okay, in short, it's an abbreviation, stands for PADEM. It's a generic framework, and these 5 things you need to do are actually you need to prepare something before you trade. You need to gather information first. The next thing is that after you gather information, you need to analyze the market. And after your analysis, you need to decide whether to enter or even exit the market. Then you need to execute your trading, okay, whether to buy, sell, or even cut loss. And lastly, you need to be able to monitor the market. Now, although you may seem like this framework seems simple, right, but don't let it fool you, because many unsuccessful traders, they made a lot of mistakes that actually falls into 3 4 or many of these areas. Investing and trading is actually about having the discipline to follow sequence step by step. You need to follow the processes. And I understand that not many people have the personality or even habit to follow sequence, am I right? Or even procedures. But when it comes to trading and investing, and if you want to succeed in this area, then you better develop the discipline to develop the necessary habits of following procedures. Okay, this is actually the number 1 requirement. And along the way, I noticed a majority of the traders, they tend to heavily focus on one of these 5 areas here, which is the analysis, which means when you trade, either you analyze too little or spending too much time in analyzing the market, and then you may forgotten other important things. Okay, you may skip the other 3 steps later. And a lot of traders, they do not know what to do regardless of the market conditions, whether the market is moving up or coming down. They have no clue of what they are going to do next when the market moves. Even though they have already analyzed the market, they still do not know what to do. Okay, so does that sound familiar to you already? Okay, I believe this is quite familiar to you, or maybe you have been experiencing it yourself. So we can see that this phenomena actually happens because traders do not have a solid framework to guide them through the whole process in trading. So if you don't have a solid framework to guide you through, the whole process in trading. So this is where you might find somehow, you know, your trading might be lacking, but you just do not know in which area. So you can actually refer to this PADEM model framework to see which of these areas that you need to improve on, okay? And it's important for you to have a framework in trading and investing so that you know exactly which part or which stage you get stuck at, and then you are able to actually identify your problem and you can take the necessary actions to solve your problems. Okay, so let me go through with you each and every steps, and in the next few slides I will pinpoint some of the main challenges you may face in trading so you can have a clear understanding how to use this framework. Now, the first thing, most people just jump straight into analyzing the market, but the first step is actually very important. Let me tell you why. Okay, in fact, before you analyze the market, the very first thing you need to do is actually prepare. What that means is that you need to gather information, data, or reports from different sources. Am I right? And this is actually would affect the quality of your research. The quality of your research would actually depend on the quality of information you get. So the first thing you want to make sure is that when you gather information, make sure that your information source is good, it's reliable, and has credibility. And that's where you will be able to get high quality information. And with high quality information, your analysis can be useful and valid. Okay. And if, imagine this, if you get low quality information, for example, you may get, you know, false information or even distorted information, then your analysis is actually not useful or invalid. Make sense? So it's a very simple and straight logic for you to understand. And nowadays, with the advances of information technology, we have so many social media platforms, Facebook, Instagram, Telegram, WhatsApp, TikTok, blogs, and even forums. There are just too much information loading us, right? Including false information, outdated information that is, you know, circulating in the market, and even more. So simply speaking is that, in short, the first step you need to do before you proceed to do your research and analysis is to make sure you get high quality information from good sources. Now, the second stage, after you gather information, the next thing you need to do is, of course, research and analysis. Here, I want to highlight how to analyze and the process itself. And later on, we will be focusing on what are the things that you need to cover in fundamental analysis and technical analysis. But here, I want to highlight how to do your analysis, which is actually a little bit different from, you know, trading the stock market. Now, there are two ways to analyze the product you trade, right? So the first approach is actually the bottom-up approach, where you analyze from the individual level, from the company level, then you expand to the studying about the industry and then the economy level. So it's from a specific item, a specific company, and slowly you analyze to a broader general economy, right? The second approach is the opposite one, which means you spend a little bit more time on the top-down approach, where you analyze the economy level. You spend a little bit more time in analyzing the economy, and then to a specific industry, then to a specific company. So this is from a general to a specific approach, a top-down approach. So if you are trading the stock market, you can use any of these two approaches to select your stock. Am I right? However, in trading the futures market, whether you trade FKLI or FCPO, it would be easier for you to use the top-down approach, not so much of the bottom-up. Okay, later on in the next topic, I am going to explain to you why it would be easier for you to use the top-down approach when you trade the futures market. So, for example, if you are to trade FKLI, right, it consists of a 30 stocks component, and it really takes a lot of time and effort to study all of them. So later on in the next topic, I'm going to elaborate more on this. Stage 3, after you analyze, stage 3 is actually for you to decide. In fact, many people get stuck in stage 2 for a very, very long time. Okay, even for people who have been in the market for many years, they still get stuck in stage 2 for a very long time. They analyze too much about the market. They spend too much time in their analysis. Now, can you let me know whether you are spending too much time in analyzing the market and still unable to make any trading decision? If you are currently experiencing this problem, you can type in yes in the chat box. Okay, I repeat my question again. If you are spending too much time in analyzing the market and you still haven't even come to a conclusion yet, and in the end you're still, I don't know whether should I buy or sell in the market or sell in the market. So if you're experiencing this problem, type yes in the chat box. It's actually a normal and common thing, and some of you put analysis paralysis, which is very correct. In fact, if you are unable to make decisions, it's actually quite easy problem for you to solve. Okay, all you need to do is actually to develop trading rule and criteria to trade, how you enter the market or how you actually exit the market. So I am also going to share this with you in the next topic. And generally, there are 3 outcomes when it comes to decision stage. Okay, the first outcome is that if you don't do any analysis and trade the market, it is actually a rash decision, right? You just jump straight right into the pool without knowing how deep the water is. So it's actually a very risky thing. The second outcome is when you have already done your good analysis, but you don't have any decision, you don't have any conclusion yet. So this is where you don't have any stake in hand and you don't make any trading decisions. You have no position at all. So even though your analysis is very accurate, the market goes up or comes down, you don't gain anything from it. Okay, and the last one is actually the best practice you need to strive for. This is where with good analysis and a firm decision, that's where you put your money in your analysis and gain from it when you're correct. And if you're wrong, it's okay as well. Just cut loss and get out from it. Okay, so simply speaking is that the most important thing is you need to be able to take responsibility for whatever consequences that comes from your decision, whether is it good or bad. So making decision is actually one of the critical factor that determines whether you are able to achieve success in trading or not. Now, after stage 4 is actually a little bit fun. Okay, stage 4 is to execute your decision. Again, many times you may have already decided, am I right? But you just dare not execute your decisions. So how many of you face this same problem in your trading as well? You can type in 1 in the chat box. You has already make a decision to buy the market. You have already done your analysis, but you just dare not pull the trigger. You just dare not execute a decision. You just want to click buy. Somehow you have cold sweat in your palms. It's hard for you to make this decision. So for stage 4, it's very important for you to execute. Now, of course, there are 2 outcomes in this stage, right? Simply speaking is that you have already made a decision and you execute. Of course, this is the best practice. And the next outcome would be that the opposite one, right? Where you have decision but no execution. So same thing, you don't have any stake in hand in the market, even though you are correct in your analysis. So how to solve this problem? You need to find out why you are unable to execute. Okay, you need to find out why you are unable to execute. Is it because that you are not confident about your own decision? If that is true, then is it because you don't have sufficient analysis? You don't do sufficient homework. You don't analyze enough in the market. So if this is the case, then you need to spend a little bit more time in doing a research or developing a good trading rule. Or maybe you just can't make an execution because you have had a bad experience of being wrong and lose money in the market. Most of the people, initially when you're fresh in the market, you are very motivated, you are very gung-ho in the market, and you can make decision very fast. But because of several bad experiences of being wrong and losing money in the market, so this is where your psychology holds you back. Okay, so in English we call it once bitten twice shy. right? So fear is actually stopping you. So how to solve this is that you need to be able to find solutions how to overcome it. Okay. So in fact, what simple way is that you need to follow through your trading plan, your trading strategies. Another way is that is a little bit slower method is that you need to be able to identify what are the trading psychology issue that is holding you back. Now the last stage is after you executed your trade, especially when you have position in hand, you need to monitor the market. You need to constantly monitor and review your trades. Now, what I mean is that monitor your trades does not mean that you have to, every hour look at the price. Okay, many beginners actually don't monitor their trades. They think that after they have already entered the market, they just leave it there, hoping that the market would actually go in their favor. So when it comes to market, most people just only monitor the price, whether the price goes up, goes down. And in fact, there are other things that you need to monitor as well. Each and every day, there will be new information that comes into the market. And you need to repeat the whole process from stage one again. Okay. In fact, it's a quite an everyday thing. Each and every day, you need to repeat from stage one again. After you monitor the market, you need to gather information again, reanalyze the market, make decision, and execute your decision whether to continue to buy, sell, or even do nothing by holding your position and monitor the market again. So this whole framework is actually a cyclical process. Although this PADEM seems simple and easy, right? But if you were to look detail into each and every component, there are a lot of tasks that you would actually need to do. Okay, so remember this PADEM framework, and then later on we will revisit how to use this PADEM framework in order to develop your trading plan. Now, the second topic is where the market forces that drives the market. Of course, when it comes to trading, you need to know what are the reasons behind that drives the market, right? Now, my question to you is that whether is it using technical analysis or fundamental analysis is important when it comes to trading. If you think technical analysis is important, you can type in TA. If you think believe fundamental analysis is important, you can type in FA in the chat box. And if you think both, you can just type in both. Okay, it's just only an opinion. There is no right or wrong. In fact, I see nowadays a lot of people may type in TA, but for those who are a little bit more experienced, they would actually type in both, right? So all of us knows that price don't go up or come down for no reasons, right? It has to be some reasons behind that actually drives the changes in price, and that is the fundamental factors, the fundamentals and conditions that moves the market. So fundamental analysis is also important as well, but this one will come at a later stage because it will be easier for you to trade using technical analysis, because fundamental analysis takes some time for you to develop the knowledge. So in this section, I am going to share with you some of the key fundamentals that you need to take note of when you trade the futures market. Now, as I've mentioned earlier, that trading futures uses more of the top-down approach, because trading FKLI or trading FCPO is generally looking at the bigger picture. It is actually looking at the macro perspective of the economy. Unless you are trading single stock futures, then you only need to look at the individual stock you trade. If you trade the stock market, you can use either both methods. But when you come to the future market, FKLI and FCPO, it is more about looking at a bigger picture about the market. So using top-down approach, spend a little bit more time in gathering information and analyze the bigger picture, the economy makes better sense. Now, of course, now analyzing the futures market using fundamental analysis, generally you do not need to look at company level, right? Because FKLI has 30 companies. There is not much time for you to look at all 30 companies. And when it comes to FCPO, it's more about the whole crude palm oil, the oil seed market itself, rather than the individual plantation company. So you need to look at the bigger picture of the economy. Now, of course, it would be depending on which futures product you trade. You need to know what are the macro fundamental variables that actually affect them. If you trade index futures, FKLI, you just only need to know what affects the FKLI price movement. If you trade commodity futures, FCPO or FIPO, you need to know what affects FCPO price movement. Now, for the index futures in Malaysia, we have FKLI as well as FM70. The index component for both FKLI and FM70 consists almost all industry in the components in the index itself already. And all of these companies are basically operating in Malaysia. So you basically need to look at the Malaysia economy and what are the factors that affects Malaysia economy. So here we have, we need to understand what are the general fundamental factors that you can actually look at. So the first one would be, of course, on the macroeconomic data and indicators. You can look at GDP rate, inflation rate, unemployment rate, and many more fundamental economic data. The next one would be the fiscal policy. You have government spending. So I believe recently, almost every one of you understand or knows the recently announced government budget, right? And the tax rates. So this falls under fiscal policy. And the other fundamental, big area of fundamental factors would be on the monetary policy. We have interest rate as well as money supply. So if you trade the index futures, basically you don't really need to look at the individual index component. And of course, there are more advanced traders. They look at individual components to do their analysis. To put it in simple words, when you gather information that is tilt towards economic improvement or economic growth, then the index would likely to go up. And if the information that you gather tilt towards economic slowdown or economy deterioration or stagnant, then the index is likely to come down. And also, the global market economy and sentiment also affects the index futures as well, which I actually did not put in this slide. For example, the index is in United States, for example, the Dow Jones Industrial Average or S&P 500 doing, and in what happens in the Asian market, for example, the Hong Kong Hang Seng Index, the movements in overseas markets also does more or less have relationship that actually affects our Malaysia index futures as well. So these are the general fundamental factors you want to look at when trading index futures. Next, for commodity futures in Malaysia, we have FCPO and FEPO. So for fundamental analysis in the crude palm oil, you want to look at the factors that affect the demand and supply of CPO, such as the MPOB data, which generally we look at the production, stocks, and many other things. The import and export restrictions and or taxes for CPO. And for palm oil market, right, a little bit special is that Malaysia, Indonesia, China, and India. These are the four main economies that is actually has a lot of impact with with the crude palm oil market. So you would want to look at these four countries that comes out with palm oil related news. And lastly would be the seasonality. And of course, where if you were to trade CPO, FCPO, you don't really need to look at individual plantation companies because you're actually trading commodity products. It is different from stocks, okay? Looking at individual plantation company actually is not so relevant. So let me summarize this is that to put it in simple words, when you gather information that is tilt towards increasing demand or lesser supply for this crude palm oil, then prices is likely to go up. If the information that you gather is tilted towards reducing demand or increasing supply, then the price would likely to actually come down. So these are the general factors you want to look at when you trade CPO futures. And one more commodity product, which is the FGLD, the gold futures, which is the newly revamped futures in Bursa Derivative Malaysia. And of course, these are the general fundamental factors you want to look at when you trade futures gold in Malaysia. And I believe the former speakers have shared in depth about this topic recently, and I'm not going into detail for this. Now, the topic 3, timing the market and how you can actually ride the bull and bear market. Timing is very important when it comes to trading. You need to know at least the basic rules of trading. So generally speaking, all of us knows that technical analysis is about studying the price movement of the products that you're trading. And in technical analysis, there are two schools as well. Okay, the classical school, which is the very old school, which means you need to draw trend line, you need to draw support resistance line, and even chart patterns, candlestick analysis. Or you can also use the modern school of technical analysis, which focus primarily on technical indicators. Or you can actually combine both of them when you trade the futures market. Now, the most important thing when you use technical analysis is that after you use technical analysis to analyze, can you make a trading decision or not? We remember our PADEM framework: prepare, analyze, and then what's next? Decision. Am I right? You need to be able to make a decision. Otherwise, your analysis equals to nothing. And then after you have made decision, you need to be able to execute it and then monitor your position. So as you may have not already know that TA is about studying price movement. So what you need to do next is to have trading rules and criteria for you to enter as well as exit the market. You do not want to spend too much time in analysis and still no conclusion. Am I right? So you want to be able to make a decision so that you're actually able to have a stake in the market, you have a position in the market. Only then you will know whether your analysis is correct or whether your analysis is incorrect. And you can actually use this simple rule to develop your trading rule. Okay, you can use this very simple is what we call the if then rule. So for example is that if this happens, then what you are going to do next. If other things happen, then what are you going to do next? It's a very simple thing to apply. Let me give you a quick example in trading. So if for example, if you were to use drawing support and resistance line on your chart, you can use this simple rule in trading. So after you have drawn your line, you can see if your price breaks above resistance line, you can actually take a long position by expecting the price to goes up. And if the price breaks below support line, you can take a short position. So it's very simple, right? You can also use this if then rule to develop different sorts of trading rules. And of course, you need to keep your trading rule as simple as possible and as easy as possible for you to execute. Because if your trading rule is too complicated, ultimately you will still end up with unable to make decision, right? So always keep your trading rule as simple as possible and easy to execute. And last thing, when it comes to technical analysis or trading, is that most beginners in the futures market generally come from stock trading, right? And maybe you are actually one of them. You have some experience in stock trading and you get so used to only one direction, which is only on up direction only. Because of the stock market, you can only profit from one direction, which is uptrend for most retail investors. However, because you are trading the futures market, Remember, you can actually take advantage in the futures market. You can trade both directions in the futures market. Okay, you can trade in a downtrend, whether is it a downtrend FKLI or downtrend FCPO, by taking a short position and profit when the price comes down. So that is the advantage of futures market as compared to the stock market. Okay, I repeat again. Futures market has this advantage where you can actually trade both up as well as down directions as compared to the stock market. So since you are going to participate this trading challenge, right? So take this opportunity to test out how does it feels like to actually trade in a down direction or both directions in the market. Now, let me give you a quick example on how to apply a simple trading rule. Of course, in technical analysis, a simple trading rule is actually using a trend line to identify trend. So whether is it an uptrend or whether is it a downtrend, then you need to be able to make trading decisions, whether to long the market or whether to short the market. Now, let's have a quick look on at this chart. If you're using trend line to identify the trend, for example, so here in this chart, you are able to identify the end of uptrend. Am I right? So you may actually take opportunity to actually short the market. Why? Because ending of an uptrend is actually the beginning of a downtrend. So you can see in futures market, you have this advantage by shorting the market. It's unlike stock. Stock, you need to borrow stocks to short the market first, right? And sometimes it does cost you interest in order to borrow stocks. But in futures market, you don't have to borrow anything. You can directly take a short position without borrowing anything by shorting the market. Okay, you can sell high first and then buy it back at a lower price. So here you can see that that's the uniqueness of the futures market. So it's a wonderful opportunity for you to participate in the derivatives trading challenge. So register yourself if you haven't already, because since this is only a simulated trading, right? It's a simulated trading. It's a paper trading without risking your own money. So you can actually take this wonderful opportunity to test out your skills, to test out trading futures. What is futures trading? How does it feels like to trade futures? And with this trading challenge, with this trading simulation, you can also understand how does the future market works. Okay, you can test out different kinds of orders to understand how does the futures market mechanism work. So familiarize yourself with trading both up and down directions. Okay, so take advantage of this opportunity to participate in the trading challenge so that you are able to familiarize yourself with the futures market. And of course, just now earlier I mentioned, right, it's easier for you to focus on using technical analysis as your trading rule to trade the market, because technical analysis, the trading rule, it's a little bit simpler because you as a retail traders, you are not trading big, right? You may be trading one or two lots. So this is where you want to test out what are the trading rules that are good for you to trade, and you do not want to spend too much time in reading too much of these fundamental news and yet not being able to come up with a conclusion. Yes, so I highly suggest for you to start with trading using technical analysis first, and then you can take your time to slowly develop knowledge in fundamental analysis, because learning economy, learning how to analyze the market, learning how to analyze industry, it takes time for you to learn and digest. So simply speaking, use technical analysis to trade the market first, so that it's easier for you to go through the whole process of trading, from preparing, gathering information from the market, to analysis, to decision making, to execution, and then monitoring the market. You go through the whole process, then you understand what is the whole process of trading looks like. Now, the last topic, winning starts from developing a trading plan. Now, of course, I believe if set trading aside, if I were to ask you another question, if you want to build a career, you gotta have a career plan, right? And if you want to build a business, you gotta have a business plan. And what about trading? I believe you can guess it already. You need to have a trading plan. And planning, in fact, it plays a critical role in almost everything. And same goes with trading. You need to have a trading plan so that you have a guidance of how to follow your trading process with discipline. If you don't have a trading plan, you don't have a structure at all. So when you don't have a structure and when you don't have any process, it's hard to know what you need to do next. So simply speaking, if you want to win in trading, then it starts from developing a trading plan. And I'm going to share with you how. Now, before I go into how to develop trading plan, let me share with you the evidence of why planning is critically important. Early on when I started out in trading, I don't think planning is important. When I do get into career, I also don't think career planning is important as well. When I go for holiday, I also may not think planning is important as well. As I get into learning in trading, I slowly beginning to develop the understanding why planning is so important. Let me show you some evidence here. Now, first thing, I believe most of you understand this, right? The Sun Tzu Art of War, probably the most popular Bible for war and strategy. So in the Art of War, the first chapter already start talking about planning. Okay, so here you can see how serious it is. Before going for war or battle, you definitely need to develop a plan first before having any strategy to attack or defense or anything else. Having a plan is the foremost important thing among all. Secondly, if you have learned the principles of management before, or if you have learned management subject, right? The POLC, which is a very common thing, which means the planning, organizing, leading, and control. Again, you can see planning comes first before anything else. And another example, can anyone of you guess what is this picture, the last picture? If you know what picture is this, you can type in the chat box. So I believe this last picture would seem to familiar to many of you if you are interested in this area. Okay, so it's football, right? British football, not American football. Okay, in other words, we call it soccer. So any football fans here listening here? So football, if you are a fan of football, you understand that football also need to have a good game plan to win. Without having a good game plan, it's almost impossible to win. It includes how to have a formation, how to attack, how to defend, how to manage your risk, all sorts of that. So football needs a game plan to win as well. Even for badminton as well, you need to have, besides skills, you need to have a game plan how to win the game. Now, my question to you is, do you have a plan in trading or not? If you already have a plan in trading, you can type in yes. If you don't have a plan in trading, you can type in no in the chat box. Okay, what do I mean by planning in trading is that you know exactly how to trade the market. You know exactly how to enter or even exit the market regardless of what the market does. Okay, planning is actually very, very important. And later on, I'm going to share with you planning is actually in which stage of the PADEM. Without planning, it's a little bit hard for you to actually proceed to the next step in trading. So I see majority very good. A lot of you type in yes. So I believe you more or less you have a trading plan, and I believe majority of you, right, coming from a stock trading background. So let's have a look. One of the famous quote, I believe you have heard of this before, is that if you plan to fail, if you fail to plan, you are planning to fail. So you need to treat your trading a little bit more serious, regardless of how you see trading as. Some of you see trading is like running a business. Some of you would see trading is like playing a game or even sports or any other analogy that that you can actually apply here. I'm not quite sure what you treat trading is like, but for me personally, I treat trading like flying an airplane. Okay, I need to make sure that before I take off, everything is well checked for my airplane before I fly the plane. And I need to make sure I have emergency uh, protocols so that I am able to manage my risk if emergency happens. And I also plan before I take off, and I also plan what is my flying road is going to be. Uh, so these are my metaphor or analogy for trading. I'm not quite sure about you. Maybe you have your own metaphor for trading. I see somebody put trading is like putting food on the table. That's interesting. So regardless of how you treat trading as, it's best for you to treat trading a little bit more seriously because it involves money. It involves your hard-earned money. It involves your savings. So don't risk your money unnecessarily. It's more important to protect your money first than making money. Okay, protecting your money is more important than trying to make your money, because if you are able to make a lot of money, if you lose everything including your capital, you need to start everything again. So personally for me, a rule number one for trading is managing my risk, and you need to have a trading plan to win. Now let's have a look on how to use this PADEM framework in order to develop your trading plan. So how do we develop this trading plan here? So first, let me repeat again. How do you do your trading? Is that you need to prepare your trading by gathering information, high quality, good source of information, high quality information, and then you do your analysis. After you analyze, you have your conclusion. You need to be able to decide whether to get into the market, get out, or do nothing. Then, when you have your decision, you need to have a really firm decision by executing your decision. Having to decide yes or no is not good enough. You need to be able to take the action to pull the trigger by executing a decision and have a stake in the market. And lastly, you need to be able to monitor, especially if you have a position every single day. And of course, it doesn't mean that you have to monitor every hour. You need to at least monitor once a day, so that again, you repeat the whole process again by gathering new information in the market, analyze the market again, decide, execute, and monitor. So it's a cyclical process here. Now, your trading plan should at least cover these two main areas: how you analyze the market and how to make your trading decisions. Okay, so what are the things you need to have is that, number one, you need to plan how to enter the market. When are you going to enter the market? What criteria or what conditions need to meet in order for you to enter, whether is it long or short the market. Okay, it's very important. The next thing is that you also need to plan and you need to have an exit plan, because once you enter, it's more important for you to get out rather than get in the market. Am I right? For some of you. So it's also important to know when are you going to get out of the market, what criteria and conditions that needs to be fulfilled for you to actually get out from the market, whether is it take profit or cut losses short. Third plan is where you need to be able to cut your losses. Okay, you need to manage your risk by protecting your capital. So it's a very, very crucial thing. So which is why managing risk is always number one priority in trading or even in investing. So which is why the metaphor or analogy for me in trading is that I treat trading is like flying an airplane. I'm not quite sure about you. Trading can be like a warfare. You need to treat trading a little bit more seriously. Fourth, you need to have a plan how to manage your money. Okay, how much contract that you are going to trade. So trading futures is a little bit different from trading stocks because trading stocks you don't have something called initial margin, but trading futures you need to be a little bit aware of what are the changes of initial margin, because initial margin is actually the minimal amount for you to be able to open one contract. So you need to be able to manage your money as well. How many contracts that you are going to trade, because futures product is actually a highly leveraged product. You can make a lot, you can lose a lot as well. So it's important for you to manage your money when it comes to futures trading. And lastly, a lot of people do not have this plan. Okay, I do have this plan. I'm not quite sure about you. Is that you need to have a plan to take a break from trading. Okay, you need to know what are the conditions for you to literally stop trading and stay away from the market. Otherwise, you will continue to put money on a losing strategy. You will continue to put money in a losing position. So it's important for you to stop trading for a while if you have been, losing a lot of money, or if you are just, physically tired or mentally tired. It's not the best time for you to make any trading decisions. So that would be for my plan to take a break from trading. Okay, so it's important for you to stop trading for a while and revise your plan. So all of this plan is generally what we call the trading strategy: how you enter the market, how you exit the market, managing your risk, managing your money, as well as taking a break from trading. So final words before I end my session is that you need to be able to plan your trade and trade according to your plan. Now that you already have developed your trading plan, right, you need to trade according to your plan. So if you don't follow your plan exactly right, it's like having a GPS uh, navigation system and you don't follow it. Okay, so I believe may have, a lot of you may experience using your Waze, Garmin, or even Google Maps as your GPS navigation system to find what is the shortcut way, the shortest time, the shortest distance to reach your destination, right? So those are actually a plan. So if you don't follow your GPS system, right, you may actually take a longer road or waste a little bit more resources, more time in order to reach your goal. So very, very important. If you have GPS, follow your GPS. If you have a trading plan, it's best for you to stick and follow your trading plan. And if you don't have your trading plan, please develop a simple trading plan. It doesn't have to be complicated. Develop a simple one first, test it out. If it doesn't work well, you can always revise it all again. And if you are unsure about your trading at any point in time, I believe there will be time you are not quite sure about your trading, right? You are not quite sure, even if you have trading plan already, you are not quite sure whether to take a position in the market or not, whether to, cut your losses or exit the market. What you can do is actually always refer back to your trading plan, because it is a very, very important thing for you to refer, because trading plan is actually the backbone for your trading, so that your trading is systematic, so that your trading is structured. Okay, so always plan your trade and trade according to your plan. So let me wrap up this session with the 4 key takeaway points. So I've shared with you the generic framework for investing and trading, which is the PADEM. Can you remember that? Planning, analyze, decide, execute, and monitor. It is a repetitive process every single day. Now, the next thing is that fundamental analysis in futures market is a little bit different from the stock market, because in futures market, you need to do the other way around. You need to do on the top-down approach by analyzing the market first before you jump straight right into doing this bottom-up analysis, because top-down analysis save you a lot of time when it comes to trading the futures market, whether is it trading the index futures FKLI or the commodity futures FCPO. And thirdly, technical analysis in trading. Don't just focus on technical analysis. A lot of people learn a lot of technical analysis, but they still do not how to make a decision. So ultimately, what you want from technical analysis is that you want to derive a conclusion in order to make a good decision in trading. So focus on decision making if you are to use the technical analysis to trade the market by developing a simple trading rule using the if-then rule. And lastly, trade according to your plan, because trading plan provides you a step-by-step guidance of what to do next. Trading plan is actually your backbone for trading. I understand a lot of you, it's a lot of personality and habits. A lot of people do not have the habit to follow things according to plan, or don't have planning at all. But when it comes to trading and investing, the best practice is develop the necessary habit and discipline to go through a process sequentially. Okay, so that's it for my sharing for today. And it's important when it comes to trading is that you need to develop good trading psychology by having the right education and knowledge, because right education and knowledge is actually, again, based on the PADEM model, is actually, it starts from the prepare. If your input is incorrect, if you get a wrong education or wrong knowledge, your application will be incorrect as well. So good trading psychology is actually begins with the right education and knowledge, so that you are able to apply your knowledge correctly. And that's it for my sharing. I pass this back to Ting Ting.
Very much, CY, for your presentation. Very insightful. I believe by now you should understand exactly what is PADM and the overall picture about futures trading. Now, without further ado, please allow me to introduce our second speaker, Goh Hua Kian. He is going to explain to you about this DVTC. Please really stay tuned and pay attention, because you can be the winners, the first winners and the champion to win the 7,000 worth of cash, because in total the cash prizes worth 40,000 and the winners get a chance to win 7,000 worth of cash. Now, please allow me to introduce Goh Hua Kian. He's currently the dual license for CGS CNB, and he works on marketing derivative products as well as creating marketing strategies for the company itself. Now, please allow me to pass it over to you, Hua Kian.
Very good evening to everyone. Okay, so glad to see everyone here. So my name is Hua Kian. Okay, so before we start explaining about DVTC, I'm gonna do a little bit of introduction to what is CGS CNB, as well as a little bit about us, okay. All right. Okay, so disclaimer. A very quick disclaimer. We do not provide any intended to provide any specific advice or recommendation to our viewer here, okay, which is like tips for trades or anything like that. So anything is done, promoted here is to buy or sell, not an invitation to buy or sell or subscribe to any securities or futures. Okay. All right. So CGS CNB is futures is actually a broker. Okay, so we are actually a dual license branch. We have dual license branches nationwide. So it means we support both securities as well as futures. Okay, we do have 24 hours dealing desk support. Okay, 24 hours as in Monday to Friday lah. So working days 24/7, 24/5. So anytime in the midnight you have any questions or have any technical issues, you can contact us. Okay, and then we do provide daily commentaries for equities as well as for futures lah. So maybe if let's say you do not know which direction currently maybe FCPO is going, then you may refer to our daily commentary to have more information for you. Okay. And then lastly, we do provide online applications, means that you do not need to come to any of our branches to open an account. You just open online and that will do. Okay, so what products we offer? So for VGS CMB futures, we actually offered futures as well as CFDs. Okay, so but today we focus more towards futures. So in futures, we do have two, which is conventional futures as well as Sharia compliance futures. Okay. All right. Okay. For trading platform, so we do have three type of trading platform here. So we have QST, iTrade, and iTrade Pro. Right. Okay. So for QST, they do have both desktop and mobile applications. Same for iTrade and iTrade, but iTrade Pro only have desktop applications. So all three of them support charting tools, which is the candlestick chart, and then QST and iTrade Pro is a paid. There's a monthly fee, subscription fee, but no worries, waiver available. But iTrade is totally free, means no charges lah. Okay, they do have both mobile application as well as web version. Okay, so I'm gonna skip on the advantages and go to the. Okay, so you can look at here. This is the QST platform, which is the same as the platform you are going to use in DVTC. Okay, so it's going to be look like this. So you can see all the quotes, and then after you place an order, you can see like your working orders and your done orders. So this will be roughly the interface for QST. Okay, for iTrade, it will be this is the web version. Okay, as well as iTrade Pro. This is the applications version, so you can customize yourself to suit your needs for all the chattings. Okay, daily commentaries. So you can, as you can see here, this is our FCPO, our futures daily commentaries. So you can see that yesterday there's like FCPOs, all the prices like settlement, volume, and stuff. So you can do your research. You can do your research, get all the information through these daily commentaries. Okay. Okay, so we do also have all the others reports such as economic updates and stuff like that in our iTrade websites. So they cover both securities as well as futures. So it's not only futures, but securities as well they cover. So you can take a look at like all the different countries news update or anything from this iTrade website. Okay, so our products, very quickly I'll go through. So we do offer local as well as foreign products. So for local, the most I would say active and famous one will be the FCPO and FKLI, which is the equities derivatives and commodity derivatives. For Sharia compliance, we are the first to introduce Sharia compliance. Okay, so for Sharia compliance, we only have 3 products under Sharia compliance, which is crude palm oil futures, crude palm kernel oil futures, as well as East Malaysia crude palm oil futures, which is FEPO. Okay, so for foreign, we do offer a lot of products, which is like such as agriculture futures, energies, metal, interest rate, and equity index. So the most famous one I would say is like soybean oil or crude, like light sweet crude oil and all this and equity index of like mini Hang Seng, Dow Jones, S&P 500, all this we do offer. Okay, so currently we are running this trade like a warrior campaigns for local. So the first prize will be 7,200 touch and go e-wallet credits. All right, for account opening, it's very easy. Just go to our website, okay? Click on apply online on the top right. Then you just need to select either you want to open conventional or Islamic. So if it's Islamic means it's Sharia compliance futures. So you just need to take derivatives. After then, either foreign or open global account, then you need to take foreign. If not, then you just take derivatives. Okay. So that's it for our CGSMB. So now I'm going to talk about DVTC. Okay, so for DVTC, this is so we call it DVTC lah. So it's a Derivatives Virtual Trading Challenge, in short DVTC 2022. Okay, so the challenge starts on 7 November to 6 December. Okay, so why just now I think Miss Ting Ting already mentioned is up to 40,000 cash prizes up for you to win, right? So it's separated to two parts. So there is an individual category as well as a university team category. So if let's say you're in a university, then you would like to participate together with your friends, then you are more than welcome to join the university team. So you just form your own group, consists of 3 members, then you just register. If not, then if you're out of this category, then you will need to register for the individual categories. So the criteria is very simple, just 18 and above, then you are age 18 and above, then you are eligible to join. Okay, so for student, you need to be 18 and above as well, and then you need to be a university students. Okay, so registration is going to end soon. It's going to end on 28 October. So if you want to join, then you need to be fast to register yourself. Okay, so how to participate? Like I mentioned before, register by 28th October. So you'll receive a confirmation via email. Then after you get the confirmations, right, then you will be able to get a link to download the platform, the DTS platform. So that is the platform that you're going to use to participate in this challenge, which is it's the same as QST lah. So but they call it DTS here. Okay, so you can just gain knowledge by visiting like the current formalization sessions. Okay, so there will be a lot of sessions. So if you want to visit other sessions or those replays, you can go to the website, click on the familiarization sessions, then you will get all the replays. So trade on it, and then you will be able to win if you achieve the highest balance by the end of the challenge. Okay, so everyone will get 100K at the startup. Okay, so by now, if you already register, you already can start trading to familiar yourself. So when the registrations ends, right, so they will reset your account back to 100K capitals, then you will start trading. So feel free to go and explore the platform. So by the time when you start trading, you won't feel that, oh, I don't know anything. Okay. All right. Okay. And then so if you have any questions regarding these DVTCs, right, feel free to go to the website itself. There's FAQ sessions. So go and read through, go and search for the questions that you want to ask. If they do not appear in any of the Q&A, right, questions there inside, then feel free to message the contact number in the Bursa websites lah. Okay, they will be able to answer all your questions lah. Okay, so prizes. I think everyone want to know this. This is the most exciting part, right? So for individual, the highest is 7,000, 5,300, 3,000, and then so on and so forth. For university team, the first will be 5,004, 4,005, and 3,009, and so on. But just a plus point, university teams, if you join, no matter you win or not, you'll be able to get a certificate from Bursa Malaysia. So it will be a very great experience, or even I would say it's very good to join. So because you get this cert, right, by Bursa, right? So next time you go and look for a job, right, you get this cert. So it's a plus point to you. Okay. Okay, lastly, so this is the registration page. So you need to fill out all these details. Okay. So there will be a place where you need to select which broker you want to be as your mentor. So feel free to select us lah. Okay. Okay. So okay. So if you do not know where is the registration page, so take up your phone now and scan this QR code. Okay. Also, I will leave it here for maybe like 30 seconds for you to scan this code. Okay. All right. So if your camera is not functioning, don't worry. You can just go to Busan Malaysia. Then after that /DVTC lah. Or you can directly search DVTC in the Google. Then you're able to get it lah. Okay. So let me go to next. So feel free to contact us. Okay. So this is our I can say this is our main building at Menara Bumi Putra Commerce. Okay. Feel free to call us at 263-59-777 or 8908 or email to us at futuresbroking.my@cgs-cimb.com. Okay. All right. Yes. Oh, okay. One more thing before I end these sessions. For these DVTCs, right? Please go to read the terms and condition. Okay, because in the previous DVTC there is people who do not read the terms and conditions, so they got disqualified. So please go and read the terms and condition. All right. Okay, I think that's all for me. So I'll pass back to Ting Ting.